Hey guys, how's it going? End of another trading week. I don't want to say it was a great trading week because there was a lot of red, and I'm sure a lot of the viewers like myself are in the red, hopefully not in the big red. But let's get right into it. Let's talk about the market. Let's talk about we have the election coming up on Tuesday. I'll talk about my AMD positions. I was able to collect some gains that are realized, but I do have a significant amount of unrealized losses, so we'll talk about that. And then we'll round out the video with editing or cleaning up some of the technical analysis on AMD, and we'll take a look at Space Virgin Galactic as well, because I was thinking about opening up a position today on it, so let's get right into it. Looking at the heat map here, you can see mixture of green and red on the board, but I would say much more red than green. I mean, look at Big Tech. This is what I was afraid of, because Big Tech had their earnings yesterday after hours. And as you've seen in my prior videos, I've said that they're probably the ones that have been propping up the market. So if Big Tech earnings don't go well, they're going to drag the market down with it. And unfortunately, I think that's what happened today. Really, Google was the only one that crushed their earnings. And as you can see, they were up after hours and they were green today. But take a look at Facebook, Amazon, Apple, all down around 6%, which is a lot for one day. I think Apple missed iPhone sales numbers. Microsoft also down, but not as much, 1%. AMD and Nvidia, Qualcomm also, even the Honey Badger is a little bit in the red. So semis had a rough day. Intel was green, but pretty flat, right? Only up 0.4%. Intel still trading below $45, which is rough for Intel right now. I think Intel's going to have a rough ride with what I think is the rise of AMD right now. But we'll have to wait and see. I've never traded options or stocks on Intel, so it doesn't affect me that much, but I know some of my viewers currently may be bag holding shares of Intel right now. Let's take a look at AMD today, see what it did. You can see right from the get-go, even pre-market we were red. We were down over 1% pre-market, sold off immediately pretty much all morning long up until about a little after 1 o'clock. Then we kind of traded flat, rallied a little bit, and we're very flat after hours. So we're pretty much down about 3.5% for the day, which is a lot for AMD. I mean, AMD is not one of those high volatility stocks. I mean, yes, it's very popular, it's very liquid, but it's usually relatively stable. So this was a rough day for AMD. But on the plus side, if we go to the options chain, my 89 strike covered calls, clearly AMD is nowhere near $89. So I was able to collect a full $500 in max profit by letting both of my 89 strike calls expire worthless. I sold them 2 weeks ago for $250 each. So I let them expire worthless. My AMD shares, my 200 AMD shares were assigned at $85 a pop. So by able to collect essentially $2.50 of max profit, I'm able to reduce my cost basis by $2.50. So right now, I essentially own 200 shares of AMD for $82.50 right now. And that number is going to be important because now Monday, or I should say next trading week, I have a decision to make. I know I'm going to sell more covered calls, but the question is what strike and what expiration do I sell them at? Well, I am leaning towards a weekly this time, the November 6th option. And I'm also leaning towards the 82.50 strike because right now AMD is trading at 75. So if I were to sell it anywhere in the mid 80s, I would collect very little premium. I mean, let's go to 85. I would only collect $17 in premium. That's nothing. If I go to 82.50, it's a little bit better, but it's still $33 in premium. I mean, if I wanted to do a return on capital calculation, $33 in premium divided by 82.50 in capital, that's only 0.4%, and that's kind of like my bare minimum. The reason why I'm a little bit scared right now is because I could sell a lower strike, but if that strike gets tested, I'm either going to have to sell off my shares for a loss or have to roll my options out. I may do that. We'll have to see how the weekend goes, how we're looking Sunday night during pre-market trading. But right now, I think the highest strike I'm going to choose is 82.50 because I don't think I want to just collect pennies on the dollar, really. I want to do at least 82.50. I may go down to like 80s or $80.50. We'll have to see. We'll take a look at the technical analysis in a second. But the other reason, if I go out 2 weeks, let's say to November 13th, and do the same 82.50, you can see I can collect $101, $1.01, which is actually a lot better than the November 6th, just the weekly. So I may look into that because it's double the time frame, right? Because it's an extra week. Instead of 1 week out, it's 2 weeks out, but it's almost triple the premium. So I may go 2 weeks out, to be honest with you, because it'll be a little bit more efficient. And although it's not linear, I would be collecting roughly $50 a week in premium as opposed to just $33. Now, the only reason I hesitate in doing a 2 week out option instead of a 1 week option is, what if we pump the market? After the election is over, what if all the fear and kind of uncertainty in the market goes away and the market starts going up? Well, let's say AMD rises after the election, right? If I've already locked in an $82.50 strike call option and AMD starts rising, well then I'm not going to collect as much premium as I could, meaning I'll leave money on the table, but also I'll kind of be hand-tied because I'd rather sell the $82.50 weekly, and then let's say at the end of the week AMD gets to $82, for example. Well, then the following Monday I can sell a higher strike at like 85, 86, for example, maybe collect a little bit of stock appreciation at that time. But if I lock it myself in at $82.50 for 2 weeks as opposed to one, I'm taking a little bit of a gamble there by possibly leaving some money on the table. Now, that's classic risk versus reward, right? Because that's why I'm collecting more premium, because there's more time for that stock to go against me, basically. There's more risk in that play, so as a reward, I get more reward. Everything about options trading is a risk to reward analysis. Now, on the flip side, let's say I sell the 2 week out $82.50 strike covered call. And let's say next week, AMD just keeps tanking. The stock market just keeps tanking. And next week, AMD goes all the way down to like $65, right? Then I look like a genius because then it'll be the same thing that happened to me this week in that I'll be able to collect max profit and still own my shares. So it's really dependent on what I think is going to happen. If I think AMD is going to keep going down, then selling a longer expiration is the smart play so I can lock in more premiums. If I think AMD is going to rally, then it might be better for me to do a weekly option. So it might be a game time decision, to be honest with you. I want to see what the pre-market trading looks like Sunday night, see what we're looking like Monday morning. But that's kind of the thoughts that go through my head. And I hope that helps people in terms of how they choose to make their own options plays. Let's take a look at the technical analysis on AMD here, because we'll have to do a little bit of editing, I think, because we got close. I had drawn the support line at about $74, and you could see intraday we got awfully close to it. We didn't close it. We actually closed just above $75. We're actually down about 9 cents after hours, which is, unfortunate. But my fear right now is once, or if, I should say, $74 breaks, then we basically have a gap all the way down to like $63, which is scary because if I zoom out here, you can see from about $58 to about, let's just say, $74 right here, actually up here to about $74. Yeah. So there's not a lot of price data here. I mean, you can see from, like I said, from 62, 63 to let's just say 63 to 73, just to keep it a $10 wide gap. There's literally 1, 2, 3 days of price data in that $10 wide range because AMD gapped up so fast. So it's near impossible to draw areas of support or resistance because you only have 3 trading days to go off of. So my fear is that AMD is going to try and fill these gaps all the way down to 63. I mean, if AMD goes to 63 and I'm bag holding in the 80s, I'm in big doo-doo because that is actually the number one risk with the wheel strategy. People always ask, what's the downside of the wheel strategy or what's the risk? This is the risk, is that you get assigned shares of stock and the stock drops and then now you're just bag holding for a long time. But the way to minimize that risk, or I guess I would just say minimize, but kind of get out of that is to pick good tickers. I am bullish on AMD midterm, long term. I don't think AMD is going to go bankrupt anytime soon. So even if I have to bag hold these things for months or over a year, I know that at some point in the future, or I am very confident that at some point in the future, I am going to be able to sell off my AMD shares if I want at either break even or for a loss. Now keep in mind, even if AMD just continues to just sell off until, the 60s, I'm going to keep selling covered calls along the way, right? I'm not just going to sit by like a buy and hold stockholder and just let my, shares accrue unrealized losses. I'm going to keep selling covered calls. And as I do, I'm slowly lowering my cost basis lower and lower. So that's why I always try and pick good tickers. I try not to pick meme stocks or hype stocks, okay? Now, why I said we might have to edit this is I don't know. I might want to edit my Fibonacci levels. Instead of from the recent lows back in June, I might do the more recent lows that are, all the way back in, let's say, around mid-September. So let's see if we adjust this to something like this to see what happens. If I zoom in here, and I'll keep the highs, I might adjust the highs like so to the most recent highs that were on October 8th. And let's see how the data fits there. I am liking the look of this right now because it does look like this 78.6% Fibonacci level lines up pretty nicely to an area of support and resistance, maybe around the high $76 range. So let's see how this looks for a while. It also looks like the 61.8% Fibonacci level lines up pretty well here as well. So I might stick with this for a while, but I do think that right now our last area of support, until the dam breaks, is about $74. So what I'm really hoping for is for some good news to come out on Monday, or the market to like the election results, and then we kind of have a little bit of a bounce to the upside. That's what I'm really going to be hoping for this weekend and the start of the trading week. I mean, the other thing is we've actually been in a downtrend. So I drew this trend line not too long ago, and unfortunately we've broken down and we've been trading downward for the past 4 days. So this is no longer accurate either. I'm going to delete this trend line, and what I'm going to do is draw another trend line that probably is going to be more accurate to look something like this. And I'm going to have to adjust this in a little bit, but if I draw it, it's going to probably be something like this. Now, we'll have to wait and see how we trade again on Monday, but we are in at least a short-term downward trend until I see something that breaks to the upside. So we'll keep an eye on it. Like I said, I'm not losing my shirt yet over AMD, but I am a little bit nervous. We'll see how I sleep this weekend. And as promised, let's round out the video by taking a look at space, because I was looking at space options today because we had another red day on space. During the middle of the day, space was down another 5%. And as you know, red days are great days to open up some cash secured puts. So I was looking at the options chain on space, and honestly, things were looking a little bit juicy. I could open up cash secured puts for the following Friday, November 6th, at the $12.50 strike for about 0.6% return on my risk, which is not bad. Not bad at all, because space hasn't traded at $12.50 for a long time. I mean, it hasn't been at $12.50 since around April of this year, right? And we're talking like, peak illness levels basically. So I didn't think that space was going to get to $12.50, but if you look at this graph, we are in a big sell-off in space. And the other thing, if you look at these lines, these light blue lines, we have a gap to fill from about $16.50 to about $18. And for the past 3 trading days, we've been filling that gap. But what scares me, or what kind of made me pause for a second, was today, the intraday low only got down to $17. And we closed at about $17.40. So we still have about $1 more to drop if we truly want to fill this gap. Right now, if space has another red day on Monday, and let's say we get around like kind of this area here in the, I would say mid to low 16s, I think that would be a good entry point to sell a cash good put. Because the lower it goes, I could open up a cash good put maybe for like $11 or maybe even $10 if it gets in this low and still collect juicy premium. I mean, this is one of those things where if I get assigned that stock at $10 or so, then I would probably try and hold this stock long term. Because even during peak illness levels, Space got down to about $8 or $9, right? It hasn't been that low since 6 months or so. I mean, before this huge run up, Space was trading around $10. So even getting assigned at $10, $11, I think it's still a great price because, I mean, not too long ago, Space was all the way up into the high 20s. If you get assigned at $10 and Space decides to run up to $20 again, well, you've just doubled your capital, right? So I am, I kind of joke and say Space is a little bit of a hype stock or meme stock. But the one thing I like about Space or Virgin Galactic is that they have very little competition. Their competitors are just Blue Origin and SpaceX. And neither of those two are publicly traded. And they're not interested in essentially, space travel. They're more on the, I think, commercial side of things. Well, I shouldn't say commercial, but they're more interested in the, business side, for lack of a better word. They're not interested in space tourism. I think that's the best way to describe it. That space is. And, this industry is not something like, oh, if somebody wants to start up a rocket ship company in their garage, they can't do that. This is not an app. This is not a product. This is a service that takes multi-million dollars to start up. So they have a wide moat. It's very hard for more competition to enter the area. So that's why I am bullish long-term on Virgin Galactic. I personally think this is one of those stocks where we could be looking back in 10 years when this stock is trading for $400 and I could be kicking myself saying, oh my gosh, I could have owned this thing for $10 a share or $20 a share. What was I thinking basically? So, and the nice thing is that if it's $10, $15 a contract, or say $10, $15 a share, and you need 100 shares for a contract, it doesn't tie up a lot of capital compared to some of the other tickers like AMD. So that's my little TED Talk or soapbox piece on Virgin Galactic. We'll see how the market shakes out. I would love it for it to drop a little bit so I can lock in some more cash good puts at a lower strike price if I get assigned. But we'll have to wait and see what happens. Let me know in the comments below if you have any questions or comments. This was a longer video, but I had a lot to get out there. Make sure you join our Discord server. If you have any questions or comments, leave them below or ask them in our Discord server. Add me on Twitter. And as always, happy trading.